Hey, this is Dr. Tom Carr, author of the IXTHYS letter. Today I'm going to show you the second of 6 steps on how you can find the best long-term investments for your stock portfolio. Stay with us to the end to learn how you can get a free copy of all the reports in this series.
In our last video, we looked at how growth, organic growth, particularly sales growth, has a strong impact on stock price over time. In the second video, we're going to look at the second key to finding your best long-term investments, and that is fair valuation. Now, there are a variety of ways of determining whether a company is fairly valued. The most common way, the one that's most commonly referred to in terms of the valuation metrics, is the price-to-earnings ratio, the PE ratio. There is the price-to-forward earnings ratio. There is the PE to growth ratio, the PE to free cash flow ratio, the price to book value ratio, and on and on and on. Now, all of these have their place. They all give us pertinent information, but I'm going to show you a better way. I have tested every possible configuration of valuation, and I'm going to show you now exactly what works and what doesn't work. So here we are back at our scanning and backtesting tool. I'm going to run a test on a value screen that goes by the name of Joel Greenblatt. He's the author of the book, The Magic Formula, Formula Investing. And this is a scan that's based on the system in that book. It is using a variety of different valuation metrics. Let's run a back test on it over the past 15 years, rebalancing our portfolio every year, and see what comes up here. And you can see that Joel Greenblatt's system doesn't work very well, unfortunately. It returns a loss over 15 years of 70%, negative 70%, versus a gain of 70% for the S&P 500. Let's try another system. And here we have a value system that goes under Warren Buffett's name. You'll know him, one of the great value investors of all time, student of Benjamin Graham, the father of value investing, and on and on. Now, his system is rather complex, but if we run a 1-year scan on his system, let's see what turns up. And this looks a little better than Greenblatt's system. The system returns a 15-year performance of about 95% versus 70% for the S&P 500. That is outperformance, not by a huge margin, and you can see it does have quite a bit of turbulence, like the market itself. Let's see if we can do better than that. The third system we're going to test today is one that's put together by Zacks Research. They simply call it their Value Method 2. And if we test that over the same back test period, 15 years, annual rebalancing, we come up with an annualized return, total return I should say, of about 105%. So a little bit better than Warren Buffett, still quite a bit of volatility there, and not a great outperformance. We can do better. So what I've inputted here is our test screen from the last video, which is looking at the S&P 500 stocks and taking the top 10 of those that show strong 5-year historical sales growth. Now we're going to add a valuation metric, and as I said, I've tested them all. The one that works most consistently and that works best is your price to sales ratio. No surprises there, because we've already learned that sales growth strongly impacts price more so than earnings. Now we're going to learn that price to sales valuation is even better. So we're going to insert a requirement that all the stocks that pass our screen have a price to sales ratio under 1. Now that's low. That's a good, healthy ratio for price to sales. We're going to insert it right up here. And we're still going to take the top 10 stocks based on historical sales growth. And let's save that scan. Bingo, bingo. And let's run our back test over the same period and see what turns up. And there we go. We have moved from 110% all the way up to 3,800%. That's our best return yet. So now we've got a nice looking scan You can see the returns here are 3,869% versus 70% for the S&P 500. That is a nice, healthy compounded annual return rate of 27.8%. Nice, nice, nice. We're getting there. We can do better still, but now we know that sales growth and a price to sales ratio are the two keys we want to have when we're looking for great stocks long term.
Hey, if you like this video and want to see more like it, click right here to subscribe to this channel. If you're watching by mobile phone, click the link below. Do us a favor, like this video, and tell us in the comment section what other videos you'd like to see in the area of trading and investing. And just for watching today, I want to send you a free report, the 6 steps to building a winning portfolio. Click the link right here and leave us your email so we'll know where to send it. If you're watching by mobile phone, click the link below. Thank you and God bless. Stay tuned to our channel for more videos just like this one.